Hello, Oracles. Well, the Fed's hawkish stance has triggered a sell-off in Tesla stock and the market. They finished up their Jackson Hole symposium over the weekend, and Jerome Powell came out on Friday and continued and reiterated it on Saturday that the Fed needs to fight inflation to bring everything down. We're going to get into that in a minute. I want to get into one thing to discuss from yesterday. I put out my Decade of Splits video, and I like to provide to you guys, accurate and quality content. And a little piece of the accuracy was a bit off. An MRD and random guy had pointed out that when it comes to the buybacks come 2032, there's a significant amount of shares that need to get bought back. I knew this, but I didn't actually get the full math out there. These guys were awesome to break it down, so thank you guys. So my bullish stance on this becomes more of a hyper bullish stance. Nothing wrong with that. It's still a possibility. However, I wanted to be accurate and upfront with you guys that the numbers were a little bit off. I need to go through and take a look at the free cash flow to see if Tesla can actually buy back all the shares needed to make this happen, and if they actually want to do that. There's a lot of other things that they could spend their money on rather than buybacks just for this scenario. So just wanted to be transparent with you guys that the numbers were a little bit off, but I will be recalculating those numbers in the future to break it down for you guys more accurately down the road. So looking back to the Fed and where we're going with interest rates and inflation. So again, we have a hawkish Fed that's coming out, bringing the market down right now. So, looking at where we're going for interest rates could be a 75 basis point hike like Bullard had said. The Fed was kind of hinting at 50 basis points in September and then 25 in November and December. Those numbers might go up, but we are looking at, a weakening economy basically over the next 6 to 12 months. We have a lot of retailers out there with a stockpile of inventory that they need to dump going into holiday season. So because they have this inventory, their top line numbers might not look bad, but they're going to have to take massive hits on a lot of this inventory because it's high dollar amounts, people aren't spending as much money, and they're going to want to move this product out. So in order to do so, they're going to have to lower the prices down. So top line numbers might not look bad, but their margins are going to take a hit. And when you see things like this going through, and then we start to see quarterly earnings reports with numbers like this, the whole entire market tends to get uncertain, at least in the retail sectors coming up over the next 6 to 12 months. So we'll see how that plays out with the entire market, but this leads me to believe that the Fed right now has been playing a hawkish stance. We've kind of seen them go back and forth with this all year long. It's like they're coming out with a hawkish stance as every single time the market seems to want to rally a little bit and get really bullish, the Fed comes out with a hawkish stance. It's almost like this is their way of getting this softish landing, is being, hey, here's dovish, because when we're hawkish, the market sells off. We don't want the market to crash. Let's come out and be more dovish. All right, we're letting the market run. It's on a little bit of a bull run. All right, we're pushing a little too bullish right now. Let's come out with a more hawkish stance and balance it back off. Kind of seems like that's what the Fed has been doing. Whether that's actually intentional or not, I don't know, but it seems like that's what they have been doing all year long. So perhaps this is just the next wave and we're in a hawkish stance right now, looking at a bit of a pullback so that the market can kind of regroup itself and regather, and then the Fed may go a little bit more dovish come, October and November at the next FOMC meeting at that point. So maybe September is a 75 basis point hike. Don't know. We still have to get the CPI data that comes out in September, and we might very well go under 8%. Still very high inflation numbers. However, if we are pulling down and still trending in that direction as quickly as we are going, this could lead the Fed to maybe do a little more on dovish stance just to protect the entire market from crashing, especially if we're seeing data points pointing to the fact that we are getting to a slowing economy down the road. And now looking at the charts, we are still holding a consolidation here at the time of this recording. Tesla is at 281, so it is pulling back, but this is something that we kind of anticipated, and looking at the cup and handle and looking at the different examples that we had seen from it, having a pullback after the cup and handle consolidation, totally normal, and then we could potentially get a strong V bounce. We are still trending in that direction. This is still what I'm paying attention to see if this happens, because timing wise, looking at the Fed coming out with a hawkish stance, causing this little bit of a sell-off, we could get to CPI or another trigger at some point. Maybe it's CPI, maybe it's FOMC, or it could be AI Day 2 at September 30th, or production and delivery numbers on October 2nd that cause that V bounce to run back up for Tesla. So I'm still monitoring this. We are still on the right trend for it. Again, nothing is guaranteed, but we are still trending in that direction. So I'm looking forward to this. I'm looking forward to filling that 247 gap. That is the point where I will be deploying more cash, and then I will just follow it up from there. Now, for me, I'm not going to just dump all of my cash in. I still dollar cost average daily. I still add the more we dip. So on our way down to 247, I will still be adding because you never know. Gaps don't have to fill. They fill 9 out of 10 times. We have filled every one this year for Tesla. So if we get to that point, I will be ready. If not, I am still ready either way. And so speaking about production and delivery numbers, Kurav, who is a Tesla bot, or formerly known as a Tesla bot, has had to switch his account over on Twitter due to being flagged as a fake account. Kind of upsetting, but he is now over there as Tesla Kurav. So I will put you could see it down below here. And just go ahead and follow him on Twitter. Same guy that you guys knew before, same guy you were probably following, but he's no longer there. So if you guys wouldn't mind, hop over there and follow him. But he has come out with his new predictions for production and delivery numbers for Q3 and Q4. I have updated mine as well over on Patreon. Mine increased as well. So we're now looking at about 1.41 million vehicles being delivered and produced for the year. I don't know if we're going to hit that 500,000 for Q4. I still think that they will be able to hit that. That is a high-end goal as long as they keep on building up production as they have been. However, looking at some of the numbers that Kurav put out, we're looking at 258 vehicles per day over in Berlin, 208 per day in Austin, over 3,000 per day out of Shanghai, and about 1,500 per day coming out of Fremont. So we've got these factories they're ramping up, they're building it. He is also tracking all the VIN numbers that are coming out of Berlin so that we can see the ramp growth coming out of there. Now, Berlin last week also announced that they are producing a rear-wheel drive Model Y. So that is going to be a more affordable version of the Model Y coming out of Berlin. And Jefferies and UBS and many other analysts went over to Berlin to tour the factory, and we're noticing that, the profitability coming out of Berlin is actually going to be better than Shanghai once they get up to ramp. So once they get up to ramp pace, closer to where Shanghai is, they're going to have the same costs for each vehicle to be produced, but they have a higher margin mix of vehicles that they are selling. Shanghai is selling a lot of Model 3s, still more Model Ys, but they have Model 3s in the mix, which means that it is lower margins coming out of there. They also export a lot of vehicles. So we're getting to a really nice point right now where Berlin's going to begin ramping up even more. They're going to be selling higher margin vehicles. Then the shipping costs that are coming out of Shanghai won't be as much because Berlin is producing more vehicles. So while Shanghai may have lower margin vehicles than Berlin, they also have higher shipping costs, and those shipping costs will come down, which will in turn increase operating margins over in Shanghai. Lots of great margin profit coming out of both factories, especially as Berlin ramps. And the more Berlin ramps, the more the costs will come down for Shanghai and those shipping costs, thereby allowing better margins for both factories. So this is great news all around, and we can see this happening down the road as well. And Elon had mentioned it before that having factories put in places where you can have logistics be more efficient and simpler means that you're going to have higher profitability in other factories. Shipping costs are expensive. We know this just from oil costs out there. That's why we're moving in the direction of renewable, sustainable energy, is so we can eliminate some of these high costs. So in doing so, we can get to this point where we have factories in more logical locations to be able to cut down on a lot of these costs. And then going back to the Starlink and T-Mobile news that came out from last week, Dean had mentioned in the comments about how looking at these rural areas where there's dead zones and you really don't have any service, if Tesla is going to have this service in their vehicles available to people, that is going to give Tesla that leg up in those areas. And I'm sure those markets aren't large markets since there's such rural areas, but the fact that Tesla will be the vehicle of choice for those areas just puts them another leg up above competition. Maybe competition has something like this down the road, but that's not where they're going right now. Right now, competition is just trying to get vehicles produced. That's where they're at. Tesla is already 2 and 3 steps ahead of everyone else, if not more. So when we get to that point where, people in rural areas are saying, hey, we're switching over our vehicles to EVs, they're going to need obviously charging stations, so they're going to have those out there because the range is going to be getting better on these vehicles. We'll have vehicles that may have, like the Cybertruck may have, a solar panel on the roof itself so we can travel and not even need to get plugged in, and you're going to have connectivity with the outside world. Just those few things alone are going to separate Tesla from the competition when it comes to those very specific areas. So Dean, thank you for that. That was a great point because, looking at how Tesla is growing in the future and people are like, well, what's going to separate Tesla from the competition when they all have the same things? It's little things like this. Little things like this are going to put Tesla above and beyond everyone else. Because if you're going to be going out into the wilderness, safety is going to be your number one priority. And having a way to communicate with the outside world is going to be key for this. So this will be huge for Tesla in the future. We'll see how this all plays out. So otherwise, what I'm looking forward for today is looking at the market and seeing how we're going. We're already looking like we have a sell-off coming with us right now. So this week, if we trend downwards, I'm okay with that, kind of looking for that 247 gap fill. I'd like a slower trickle down. I don't want anything massively falling off. We are getting to the end of the month though, so there might be a little bit of selling off towards the end of the month for some profit taking. So could happen, and then we might see a little turnaround. Just following day to day, that's kind of how it goes here. So we're just going to follow the charts day to day, and I'll just keep on tracking it every day just to make sure we are trending in the right direction. So let me know your thoughts in the comments. How do you feel about the Fed's new hawkish stance again coming out? Since we had a dovish Fed at the end of July, now we have a hawkish Fed, but nothing has really changed over that time. What do you guys think about it? Do you think the Fed is doing this intentionally just to kind of keep the market balanced? What are your thoughts on this? Now, just a quick note, I am doing memberships. I just got notified by YouTube that I can do this. So I'm going to start setting them up next week. It's nothing you guys have to do. I try to get to all of your comments as it is, but the channel is growing so well, I'm finding it a little more difficult to get to everyone's comments, so I apologize if I have not gotten to yours. With memberships, it will allow me to see who is out there on the channel regularly. I've got it, I think, set up for $2 and $4 for 2 different membership fees. A lot of different perks. I'll discuss it all this weekend in a video just to go over it with you guys. Again, not required. It's a way for you guys to support the channel a little bit and then get some little bonus perks for yourselves. Again, more details coming this weekend. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have that Patreon. That link is also in the description. Thank you so much. Have a great one.